Welcome to TradeTheNBA.com. This is John's reports for the 13th of November. Well, there we were at the 50%. Started to move up a little bit from there. Produced a beautiful sell signal and it just kept going. Didn't stop. We went all the way back down to the 27.31 and correspondingly to the ABM magenta right there, and even have touched the ABM green already pre-market this morning going forward. And again, nice run, 50%. That's exactly what we took. In fact, we can do a little Fibonacci. Why not? Run from there. That would take us as much as 27.10 before it might attract some interest. So still a ways away from that. Given the spark up, I mean, it's a healthy return. Not inconsistent with normal market behavior, especially given the tumult. The election results started out right, and then things got a little crazy. Now with the uncertainty of all these recounts and blah, 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 and some races that were leading in Republicans on the day the election closed, a couple days later, suddenly are not, and go the other way. Who knows what that turmoil, it just means it's going to be more difficulty moving along an agenda of any kind, which is, gridlock is never really a bad thing for the market. Uncertainty is, though, and I think that anytime you have a little uncertainty, particularly with growth worldwide and stuff like that, weighs. And speaking of weighing, euro breaking into new low territory, not unexpected given the disaster that the EU experiment is showing itself to be. Particularly the stronger U.S. growth is, it only exacerbates the difference between the two, and that 112 is probably even a ridiculous level at this particular point, given the relationship between the two as far as what you can expect yield-wise from return. And again, in fading market, you get this kind of opposing rise of Treasury, despite the fact that the yield going the wrong direction. So, and if rates hike up again in December, boy, may even be looking at the lowest in quite some time. Should be able to get down to the 100 or maybe even below. Now this has been the biggest sell-off in oil ever, and it's been pretty clean. It was interesting. We started coming down. We had a nice reset with the steel came across here. Problem was when it crossed, the orange rejected it pretty quick, despite the fact that it held on. Nothing, and then the next latest push was right over here when steel crossed above. At that point, the shakeout had dipped all the way below the negative 13. We were below the red line, and boom, that just caused us to revisit those lows. Once the low was revisited and broke, at that point, no reset at all of the steel, and so there's no end in sight per se for this decline. Orange is lower, but we're caught in that zone that I refer to as continuation, where the orange is between cyan and red, and that usually leads to continuation moves. So continuation of the down would be more down. And as odd as that is, it was healthy before. At a certain point, it becomes unhealthy because it goes too far and creates deflationary effect, so to speak, which is exactly what you're seeing represented here in the failure of gold. Though we do see the short-term buyers popping into that setup. You've got nothing else but that, and well below the red line. In fact, pretty deep at this particular point. Probably a little bit more of a retrace inevitable. Obviously, we had this dip below the red line down here, so that's all the way down to 112 on the ETF version. So here's what it was intraday. I had posted, as we were coming up, this chart where we were breaking down DOC spread, clean, straightforward. I thought, okay, fine. Potentially right here as we get coming across with the steel, that we might see a little buy return. So I set stop 50%, which left a decent profit from there. And then we ended up with gold. I thought, well, gold, okay. And then every time we get a reset, we were getting no orange. So it's like, okay, fine. Broke down to new lows. This setup came in with the dip down. It's like, all right, it's got potential, but at this point, I've just followed lower with my stop at 50%, and pretty much didn't do anything. Collapsed, and then we talked about the additional piece, and I thought, okay, it's possible that we'll get a little pump. I was out and hadn't reset my 50% from a little bit higher up, and then came back. It was already down lows, and then I posted this one, P2, where I thought, okay, now you've got a legitimate shot of making a bit more of a run, because we had seen after this 50% move an actual reset of the steel. And so even though it came across here, we started to develop another P2 configuration, and that one actually got me stopped out because I kept lowering my stop at this particular point to capture best possible return, which it was a very nice run. And then boom, we popped up only to produce another beautiful DOC spread coming through right here at the 2750. I didn't even mark them, and then boom, we just ended up with all these failures of the orange resets, even off the pivots. It's problematic because you don't really get the kind of pump you need. We started to improve with our actually going to expand it this way. It'll be a little easier to see that way. Makes it clear. There we go. That way everything's not blending onto itself. So we ended up with a gold. It took down to the new lows. We ended up with interesting cross rate at this particular point, because the orange had not happened there. It doesn't happen until this next bar. So this is something you have to watch for when these do come in, because at that time, yes, it was making a new low and there was no orange. But a couple bars later, when it actually does make a dip, and you have the correct setting. Now, I wasn't expecting a whole lot out of this one, simply because it wasn't from a steel reset. Yes, we had nice rising red from this particular point, and pretty decent broader pivot range. But it took off, and that can happen. And I think a lot of it was just because you have these weak overnight setups, and it makes it a lot easier. We have some positive extremes with it, though. And in fact, let me just go ahead and mark one of those while I'm here. I just click new parallel. So we've got one right there. I find that if you just click the snap mode, then you can just bring it to, and it'll take you exactly to it. Then there's the one that's literally right above it. And then the most recent ones have just filled back in, that were just created, which were right there. And that came off of the nice move going through here, and we ended up with just the briefest of steel crossing along with green below the orange. Not exactly a high probability. In fact, one of those is like, hey, you're just looking for that to fill there. You're more likely than not, we're going to track back up on that setup. So all in all, I thought it was some really good action. Moving back up a portion of it here, this is the same thing that happened with the big run up. You get your 50% retrace of it, or in some cases it starts out as a third, then it grows to 50, and then they kind of figure out, oh, well, maybe I liked it or I didn't like it. So in this case, you end up with a big sell-off back down, and then boom, you get buyers moving it back up. In this case, so far, about a third. 50% would take us well over that 52, and higher from there. So we're just in a really good range and still extended volatility, which I kind of like. So don't be afraid of it. As always, though, trade well. I will put up anything relevant on the Skype chat. Have a good one.